You're listening to a classic business podcast as heard on Classic 1027. 1027.
Well, while you've all been planning detailed Easter egg hunts and managing sugar rushes, there's been some very strong data out of the US powering major indices across the world to record highs. After our market close on Thursday, we got an ISM manufacturing print that smashed the street's expectations. And today, the IMF substantially revised up the 2021 and 2022 GDP forecast. World growth now estimated at 6% this year, up from 5.5%. And for 2022, it's been revised from 4.2 to 4.4%. The upward revisions are mostly in developed markets, but South Africa's growth has also been revised up slightly. Your street dogs tonight are Nesson Nair, Senior Portfolio Manager at Sasfin Securities, and Nick Kunzer, Portfolio Manager at Sanlam Private Wealth. Nesson, kick us off. Usually, good economic news has been seen as bad news for equity markets because it's been accompanied by weaker rates and increased inflation concerns. Not the case this time round, though, it seems.
Yes, good evening, Michael. It definitely seems to me anyway, that we've had a nice start to the week. Green across the screens, if I can put it like that. And on a day when Naspers was down 1.3%, all subsectors in the JSE was up. It just goes to show that there's a lot of money that's going into buying stocks on the JSE. And I suppose, as you mentioned, a lot of positive news coming from the U.S. in terms of better economic numbers. But I suppose the thing that turned equity markets around in the last 2 weeks has been the announcement of that $4 trillion package. I'm still trying to conceptualize how big that is, but it's such an enormous number that I don't think there's any comparison, certainly, that one can make. But it's definitely been the thing, in my view anyway, that has set up markets. S&P above 4,000 as well. And I think that's just going to translate into higher and higher returns locally.
And we see the S&P currently at 4,082 points. Even the Nasdaq reversing losses that we saw in the first quarter, as some of those tech names are just too attractive for buyers on the sidelines to remain on the sidelines for very long. Nick, to Nesson's main point there, welcome, on the infrastructure rollout program in the US. The issue is how it's going to be funded, and it's quite clear that it'll be funded through an increase in corporate taxes from 21 to 28%. The market seems to be brushing that off, though, and saying, well, any earnings percentages you're going to be shaving off because of tax will be recouped in the efficiencies and the multipliers that we get through increased spending in infrastructure. How are you reading it?
Yeah, even Michael. Yeah, it's sort of a strange one, as you point out in the intro. I mean, we've gone from being good news is bad news is good news. It seems like there's some sense of returning to normal, i.e. even taxes and corporate taxes going out seems to be taken in stride. And of course, that's tied in obviously with the 10-year note, which is on everyone's sort of watch list at the moment, and hoping it doesn't go above 2%. So, I mean, we're clearly heading into a higher interest rate environment and possibly higher taxes to fund, as you said, this massive infrastructure spending. I guess for us, it's the way off on the one side with so much liquidity being pumped into the market by central banks on the one side, with Mr. Biden's massive stimulus packages, which is going to support things like copper and all the sort of base metals and the rare earths and everything else, which seem to be running. I mean, we had some copper up 5% in China. So you've got that on the one side, rising tax on the other, and for the moment, it certainly seems like getting back to normal seems to be have the bulls have got the bit in their teeth at the moment.
They really do. And, you look on the commodity coin has two sides at the moment. Energy seems to be falling foul of this sharp move lower in the oil price. We did see some support come in today. It's currently at $63.70 a barrel for Brent crude. And this is on the back of the UK extending travel bans. We've got the US-Iranian talks kicking off today as well, and that could potentially add to some of the supply glut. But on the other side of that coin, you've got copper, as you mentioned. And Nick, if you look at what's going on in the copper market at the moment, there do seem to be serious concerns around this continued lockdown in Chile impacting supply. Is it more than that, though? Is it just also a sign that, it's called Dr. Copper for a reason, that it's one of those industrial metals that will be used in all kinds of infrastructure-related applications?
I think it's more than that, Michael. I think, commodity markets, certainly things like copper, that particular market is almost simple stupid. It's not, there's no manipulation involved. There's no central banks plowing money into it. It's as simple as there's a deficit. There is a large deficit in copper, we know, for 2021. There's a deficit all the way out into early 2023, according to Jepson Matthew. So there's huge problems with copper deficits. London Metal Exchange warehouses are not overflowing with copper. And then, of course, you add on to the fact that there's real push into green energy and into electric vehicles, which use as much, if not more, copper in the wiring than traditional cars do too. So on the flip side, you've got this push into green energy. It's going to use a lot more. You mentioned Dr. Copper, the actual economy bouncing back strong. These ISM manufacturing numbers around the world, Michael, have been off the charts. You're in well into the 60s, which bodes well for copper. So copper, I think, and base metals certainly the easier to understand in the sort of the asset allocation at the moment.
Yeah, they're certainly not like trying to decipher what's going to happen in the PGM market over the period of 10 years. Because if you look at the valuations there, the market pricing PGMs for perfection for a decade or more, I still am slightly uncomfortable with that assumption, considering the history of the cyclical nature of PGMs. Nesson, I want to bring you in on that point around copper and electric vehicles as well, and what we saw out of Tesla. Shares rising overnight after it said the delivery numbers for the first quarter are going to be ahead of street expectations, a total of just under, should I say, 185,000 vehicles, 184,800. I'm still not backing Tesla to win the EV race. My money's still on a good old dependable German manufacturer, Volkswagen, if you don't believe the April Fool's rebrand joke. Where would you be putting your money in this race to conquer the electric vehicle?
I think that I'll be sitting on the sidelines for a while. It's a hotly contested race, and it seems to me that sort of all incumbents are very much in the running. Having said that, though, Tesla does seem to have a little bit of an edge on the technology, specifically in relation to batteries. I mean, the whole concept of EV or electric vehicles really centers around battery technology. It boils down to that. Everybody knows how to make a metal box with four wheels. It's about how to power them and how to power them long enough and most efficiently enough. And Tesla seems to have the edge, on those big German automakers for a long time in terms of that battery technology. So if I had to bet on one, it would be Tesla. And I know for a long time that investors didn't really take Tesla too seriously. At one point in time, it was the most shorted stock in the world. Not so long ago, actually, maybe about a year and a half ago almost. And then they started delivering on production guidance, and now they seem to be beating that guidance. So, I'm just wondering whether we're beginning to see, Tesla sort of grow up from this adolescent, to a company that needs to be taken very seriously, not just in EV but across the board in renewable battery storage in general. I'm of the view that perhaps they are a lot further ahead of the competition than even what we may think they are.
Well, Kathy Wood of ARC Investments certainly would be hoping that is true. Nick, to bring you in on the great EV race and debate, would you go along with what Ness is saying? Is Tesla out front because of its technological prowess, or is it one of the incumbents because they know how to manufacture millions of vehicles? They understand this game and have been doing it for almost 100 years.
Well, I think Tesla's probably going to. I think they're going to merge with one of the bigger houses, one of the biggest sort of car makers at some point. I think for me, if you read between the lines, it's the servicing of the vehicles, the rollout of the vehicles, the support of the vehicles. I mean, they don't have a network like BMW or Volkswagen or Mercedes or Audi that are pushing hard into the electric vehicle center. They don't have that network available, unfortunately. So I think they certainly pioneered it, and they certainly made electric vehicles sort of sexy again, so to speak. And I think it's only a matter of time before they probably merge with someone, I think, and debates out anything from Apple to BMW, take a pick. I think that's probably the next play for Mr. Musk.
Yeah, and if you want to be playing into the value chain, you might be nibbling away at one of the most newly listed shares on the Nasdaq from South Africa, and one Zach Callisto's Cartrack, now trading under the name Karoo with 5 O's, I think. I think I've got the number of O's right. I mean, I don't know who brands these things. It was down a little bit overnight. It was down 3.5% at the open today. It's still slightly up on the $28 listing price. I think it's just over $30 at the moment. Very thin volumes though. So I think it's fair to say, Nesson, that demand hasn't materialized to the extent that shareholders might have hoped for.
Yeah, this was very anticipated, especially because Cartrack seemed to be one of those shares that was completely unaffected by the drop in the market last year. Earnings have been solid for a long time. Earnings grows quite strongly, and I think it was anticipated that there was going to be a lot of investor interest in this deal. But it seems to me that it just hasn't taken off yet. So it could be that we still got to give it some time. But certainly it didn't seem to have shown the enthusiasm or the hype that we all anticipated.
Yeah, it's thin volumes that we need to reserve our judgment, but it's certainly noticeable that it's down 10% today on the JSE, and we'll be following that quite closely. Another share that did slump today following a massive surge last week after it said that the rights issue is off the table is PPC. The JSE, Nick, is investigating insider trading. 100 points if you can tell me who is the last individual to get nailed for insider trading. Not Greg Blank, please.
Yeah, but just comment, Michael. It's so difficult to prove insider trading. It really, really is. And even looking offshore as well, it's so difficult. I don't know, who was the last one? I don't think there was another one in the last. I can recall in South Africa anyway.
There we go. Trick question. Well done. You get the prize. A bottle of your favourite red is in the mail. And that is the problem. That's why no one really takes these things all that seriously when the JSE announces them. It has to start making examples. But as you say, very difficult to prove in a market where the free flow of information is critical to making markets work, and that blurry line between what is inside information versus what is information in the ordinary course of things. We've got a petrol price increase, Nesson, to look forward to. Almost R1 if you drive a petrol vehicle, just under, I think, around 60 cents for the diesels. I've got a 100-litre diesel tank, so it's starting to hurt this.
Yeah, well, on the plus side, it's an indication that perhaps things are returning to normal. Volumes are increasing. I certainly see a lot more cars on the road than I did, a few months ago. So I think a lot of businesses certainly are trying to, get staff back to work, and there's a certain semblance of normality, although it's certainly not like what it used to be. But the petrol price does tend to detract, from disposable income, and companies now having run the exercise of getting staff to work from home, and have obviously got a body of evidence from which to learn how to make that a lot more efficient. I think you're going to find that the work environment is going to change anyway. So it's going to be difficult to gauge economic activity, by the sort of number of cars or the petrol price any longer. I think, we're going to have to look at different measures going forward to try and understand, what an increasing petrol price means for the for the economy.
It raises an interesting question, and I'm going to give it to you, Nick. It's one that doesn't have a readily available answer, but we see government attacking the fuel levy as an easy source of revenue. Every year, this time of year, there is a bigger than normal increase because the levies are adjusted upwards for various government taxes, road accident fund and others. But there gets a point where we start using less and less petrol, we convert to electric vehicles, and all of a sudden this revenue starts drying up for government. Currently, it's around just over a third of the price that you pay at the pump goes to the government in terms of taxes. So I suppose we can expect other stealth taxes on electric vehicles to make up for the shortfall.
Yeah, I think they're going to have to. I mean, there's a real surge around the world given what all the central banks have done and given the sort of the massive money printing we've had, there's a real hunt for taxes. I mean, you would have seen the last few days with, Mr. Biden's fact looking at putting it from 21 to 28% in corporate taxes and Janet Yellen coming out yesterday with an interesting prospect about a global tax for companies or something. So, yeah, governments, one thing's guaranteed, Michael, governments are going to find a way to get their tax in some form, whether it's taxing your cobalt or your lithium battery or your diesel, just expect it.
Yeah, and we have it here in Johannesburg now, an extra 50 Rand bin tax or wealth tax, whatever it is, if you own a property above 350,000 Rand. And this, as we also have to stomach as consumers, another almost 15% hike from Eskom. Speaking of which, I've got Eskom spokesperson standing by. Cheers, chaps. That was Nick Kunze, Portfolio Manager at Sanlam Private Wealth, and Nessa Nair, Portfolio Manager at Sasfin Securities, with your view from the market.